This earnings conversation with the management of Anand Rathi Wealth. They came out with a fabulous set of numbers for quarter 4. And typically, as is the case in a business in this sphere, which is on the growth path, in some fashion or the other, operating leverage starts showing up. And a lot of people believe there's a bit of a hockey stick effect to this. Now, we've kind of started seeing that this effect from this business, maybe since a couple of quarters, but it'd be lovely to understand from Mr. Anand Rathi himself, as to how does he see the year gone by and how does he see the next few years. Really, I don't want to talk to him only about a quarter or two ahead. Mr. Rathi, great having you. Congratulations. Hope all is safe.
Thank you, Neeraj, and my best wishes all the viewers of Bloomberg, particularly the new financial year has started and new Savat year has started. So my best wishes. Now talking, yes, this has been a phenomenal year last year when our revenues have gone up almost by 60%. Our profitability has almost 185%. And that has been a great year. But as you rightly said, what is important is coming years. What is likely to happen? I think that's where I think we have an excellent business model, which we have developed over the years, where we expect the consistency of the revenues and profitability and the operating leverage, as you rightly said. Because, as the business becomes older, as the vintage of our RMs becomes more and more, as our clients continue to remain with us, I think we see very good future. I think as we expect about 25% growth year on year for many years to come. And very simple way to understand is that whatever AUM is with us, it will grow by 10-12%. That has been our average growth of the AUM has been only on account of the profitability or the increase in the value has been about 12% year on year. So even if I take at least 10% increase in the value of the existing AUM, another 15% will come through 3 routes. Okay, one is our existing RM get from existing clients because our share of wallet, our experience has been keeps on going up with our clients. The second is the existing RM will get the new clients. Obviously, everybody has capacity to get more. Normally, we keep at least about 25-30% capacity with each RM to expand this business. And third is the new RM. That's again there we are very distinct from others. Last year, we have increased our number of RM from 233 to 275. And we have especially developed a development of people program where people join us as trainees and 2-3 years time they become RM. Okay, and so increase in RM, increase in AUM from existing clients of existing RM and the new business by existing RM. All 3 together, 15% is not a big target to achieve. So we expect, I think, Neeraj going forward, 25% around growth year on year.
Interesting. Can I just ask a couple of questions on what happened in the quarter? So, for example, and please tell me if this is an anomaly, or would you be able to explain this to me? When I saw the private wealth AUM sequentially, I think it grew about 2.3%, but the active client growth number was much larger. So did Q4 have some anomalies or am I understanding it wrong?
No, Q4, our revenues have gone up, but because Q4 was a volatile month, so obviously when the markets come down, the trail revenue gets affected to some extent. Okay. So that has been the reason, because when markets are volatile, people also, even the new clients or existing clients, they take time to decide on new investments. Okay, so that has been, but still there is a growth, significant growth. If you look at the profitability, there is a significant growth in the last quarter as well.
Mr. Rathi, tell us about where do you believe in the stage of maturity of this, are you in the cycle? I mean, not about the possibilities of growth that you outlined that you can grow at 25%, maybe for the next 10 years, and the industry too can possibly grow. But I think at some point of time, at least people who are looking at these businesses say that the quantum of money or the quantum of earnings that is coming in from the trail mix versus the quantum of money that is coming from a non-trail business would have a significant impact on how the market values these businesses. So where are you currently? where do you hope to be in terms of this mix, difference in the mix between trail and non-trail?
Yes. You see, actually, effectively, I will say our entire income is trail. But I'll explain how. But let's only confine right now to mutual fund, which is the easily understandable thing. So mutual fund trail is about 42% right now, 43%, and we expect it will go to 50% in next 2 years' time. It will keep on increasing gradually. The other income which we have primarily from sale of other products, and mainly which is market linked debentures. There also, in a way, it is still, because when our experience is 80% of our new MLDs are bought by the existing customers. So what happens, when this is for a 3 to 5 year period product, and once it becomes mature, people reinvest. If they have made money through that product, they reinvest. But yes, it doesn't come by trail; it is coming by profit on sale of these products. But so strictly speaking, the advantage in wealth management, if your client continues to be with you and the AUM is with you, then whatever you invest in will keep on coming as the income, right?
Sure.
So, but in strict sense, also we are getting to around 50%.
Okay. Okay. And you would anticipate this number to only expand even as the business expands by 25% year on year, Mr. Rathi?
Yes, because the other products normally they gradually have reduced the weightage of that, and therefore our focus is also that trail income should keep on increasing, and more RMs should be able to have trail income, because a higher trail income also brings the stickiness of the RMs with us. Okay. Once there is a greater trail income, today maybe at least maybe 40-50% of our RMs have trail income to cover many times of their cost. Okay, so they're making incentives on that. So I think yes, focus is to increase trail income and gradually bring it to 55-60%.
Got it, Mr. Rathi. Is it possible to tell us, last couple of questions, sir? One, is it possible to kind of envisage until what time frame would you continue to benefit from this? I mean, in most time frames you would, but I'm just trying to understand this expanded benefits of operating leverage coming in, because there is a sharp difference between the growth in the revenue numbers versus what happens on the operational front for you because of the operating leverage. Till what time frames do you reckon this stark difference can continue? Because it has a big impact on how your earnings are expanding, sir.
Very right, Neeraj. Actually, that is where this business is unique, that its operating leverage will keep on increasing. We have seen as the vintage of our RMs increase, their revenue salary ratio keeps on growing and growing. Okay, and therefore, my belief is that in this business, which is primarily it is the service. Our major cost is only service. Okay, and if the AUM per RM keeps on increasing over the period of time, I think the operating leverage keeps on improving.
You would reckon that no matter what the regulatory or other expenditures come out to be over the next 2 or 3 years, you will still continue to have this edge in terms of.
Correct, Neeraj. If the mutual fund commissions are brought down significantly, obviously it will have an impact. But I'll tell you for information, our expense ratios on mutual funds is among the lowest in the world, and I think the commissions which are being paid are among the lowest in the world today. Okay, so I don't see, last time it has been done just about in last 2 years these changes have been done. I don't see, because beyond a certain time, it will become unviable if you bring it down too much, and therefore then the volume will increase. The number of players will go down. So I see it either way. But one thing I'll tell you, Neeraj, we started trail system even when it was not made compulsory by SEBI. We changed our basis with AMCs that we don't want new business, we want only trail income, just to ensure that the decisions taken by RMs are in favor of the clients. Otherwise many times, and we have seen the system, people will think of converting, selling some and buying something new. So I think our philosophy of being so client-centric has really been now started paying dividends to us.
Great. One last question. You've painted a fairly rosy picture for the growth numbers and the outlook ahead, Mr. Rathi. What are the chinks to the armor, aside of the markets underperforming, aside of these commissions coming off if they do? What else could put a spanner in the wheels?
You see, I think, frankly speaking, I don't see any major reason, but yes, 25% can become 20%. Again, markets go down sharply, like it happened in 20. Your mutual fund incomes, because of AUM going down, can go down. That can always happen. But to my mind, the way our economy is there, my strong belief is that the next 10 years are really the golden years for India. For, the way we are now positioned in the entire global scenario, and the way the various reforms which have been done in the last few years. Look at GST. Look at the income tax collection last year. Now that indicates that the impact of the reforms is started showing up. And if this happens, my belief is if we continue to grow 7-8%, which is not difficult at all for Indian economy to grow, the way our infrastructure investments are required, the way our export potential is increasing, now due to the China situation, which the world is now seeing very clearly. So I think we, to my mind, are getting into an excellent next 10-year period where the economy could do very well. China grew so fast, we were lagging behind, but today it's time for us to catch up.
Sure. Since we don't get you too often on markets, Mr. Rathi, one final question really, and that is typical, because you've seen so many such cycles. 70s in the US or post-2008 in India, a higher inflation print led to a substantial decline in valuations for markets. We are now starting to look at that higher inflation print both in the West and in India as well, as the numbers came out yesterday. What kind of risk does that pose for our markets in the near term?
You see, obviously, higher inflation poses risk of higher interest rates, and higher interest rates do affect the consumption as well as growth. That's true. I am looking from now today very distinctly from what is happening in the West and what is happening in India. In India, the chances of the inflation going as fast as US is doing are not there. The chances of interest rates going again, because US interest rates had gone down to almost zero, and from there they have come to 2.5, 2.75%. In India, it has not gone down so badly. And even today, see the liquidity in the system. You've got 6-7 lakh crores of liquidity. I think chances of inflation again in India, because in the West, one of the reason of high inflation is, one is the base prices, but second is the cost of the freight, and the entire cost of movement has increased significantly, which is unlikely to, this has happened for a reason. That will come down. In India, most of our, manufacturing is within the country. So I think the impact of inflation will come, but not to the extent as we see in the West.
Got it.
And that's why, Neeraj, I think my view on the market is not at all negative. I'm positive. Maybe, the markets normally should, if these didn't happen, or the oil prices didn't go to that level, I would have normally said 12 to 50% growth is possible. But looking at that, maybe 8 to 12%. But growth, even 8%, I think my increase in markets, to my mind, in a year is reasonably good. Looking at the other asset classes, where can money go? The debt interest rates are still low, unlikely to go to 8-9% in my view. Similarly, the real estate investments is not going to come through in next few years. So I'm optimistic.
That's good to know, sir. Yeah. But you've delivered very strong numbers. Hopefully the numbers keep up, and we look forward to talking to you again during the next few quarters. Thank you so much for speaking.
Thanks, Neeraj. Thanks once again.
Thank you so much for joining.